All right, good morning, everyone. It is 8:39 in the morning of February 25th, 2022, and this is my pre-market strategy session. And so today I'm actually opening up inside of my HedgeEye account here. This is my HedgeEye subscription. This is just a small part of the products that I have available to me through the HedgeEye subscription. And this is the early look. Now, usually the early look is done by Keith McCulloch every day. However, Keith McCulloch and his sort of his sidekick support fella here, Daryl Jones, they've been friends since they went to school together at Yale. I think they played hockey together on the Yale hockey team. Don't quote me on that. I think that's, if I've been listening correctly, I think that's how they know each other. They've been great friends. And well, anyway, so Daryl is doing today. He's doing the early look, and I think Keith McCulloch is actually in surgery. He's had some kind of a issue there with his arm, his muscle in his arm, his tricep or something has been injured. And so this is the early look. Now, the early look, basically what it does is it gives you kind of a rundown on what you can expect from the day, sort of. It gives you a heads up on what to look at. It highlights some levels here. And I'm about to show you something. Actually, I'll show you. I'm surprised they put this on their public page. I'll show you here in a moment. But basically, Poland has an implied volatility of plus 368% today, 279 for Belgium, and Switzerland has 240. So if you want to trade one of the ETFs, like the Poland ETF, the Belgium ETF, or the Switzerland ETF, then it's most likely going to be bullish today. With those kind of with implied volatility above, it's not often you see implied volatility above, in normal markets above 50%. It's very strange. However, in the markets we're in right now, it does happen quite a bit more often. But even so, now here, look at this real quick. Let me just this is the public page to HedgeEye here. Let's see if it automatically. Oh yeah, so it automatically. Well, okay. So it automatically. I'm logged in. You can see here. I don't have it logged out, and usually I don't. In fact, the only thing that I usually do on this computer is charting. Otherwise, I don't do really anything at all. I don't go to the web with it or anything because I don't want to start getting a whole bunch of cookies put on this computer and so on. So anyway, the chart of the day. Now this is actually, if you go to hedgeye.com right now, I think it's actually app.hedgeye.com. This chart right here is posted on their front page, and it's really interesting that they did that because this chart is really I don't want to say it's the meat and potatoes, but this chart, this information is extremely valuable to trading and investing. Now here, so it's the implied volatility chart, and there's a lot that goes into it that it'll take way too long to explain. So I'm just going to kind of run, do a run here real quick here. All right, and essentially, what you've got is when you have positive implied volatility, and there's IVOL, RVOL. IVOL divided by RVOL, right? And so when you have these really high positive, even 100% here, France is at 100%, Belgium 279%. If it's hard for you to see, if you're on a small screen, let me blow this up a little bit, make it a little bit bigger so it's a little bit easier to see. So Belgium here, 279%. France, 102%. I mean, these numbers are all incredible. right? Poland 368%. And you can see yesterday, so the implied volatility is actually going up from yesterday. A week ago, it was at 1,000%. You could say Belgium was really oversold a week ago. So things are looking really bullish, and these are the European equities. Now it's funny, he's got North American equities here, but then it goes to Argentina. Oh, actually, and here are the symbols too, right next to it. So EPOL, if you're curious to know, EPOL is the ETF for Poland, for example. So that'll be a good one to trade today, most likely. Although the IVOL is coming down. I mean, it's coming down from 400% down to 368%. I'd rather see something going up, like for example, Belgium here. So there's more chance of an upside. Anyway, it's funny though that he's got North American equities right here, and then he goes into Argentina, Colombia, Chile, Brazil, Mexico, and Peru. The only other North American one here is Canada. And these are today's, the current, see this column up here, it says current right here, so these are today's IVOL premiums, really. There's only one discount right here, and that's Peru. So I mean, I don't really see a reason to short Peru based on a negative 21% IVOL. If this were normal times and there was a negative 21% print on there, under normal circumstances, in normal markets, that would be a place to look for a short, because everything else, implied volatility, these numbers would rarely get in a regular, calm, normal market. I mean, all of these numbers would rarely get above 10%. So to see all of these numbers at such a high valuation, and here's emerging markets. It's funny that he puts Australia in emerging market and Hong Kong. Well, I guess Hong Kong kind of is now, but yeah. So and it's interesting that they make this public, and I think the reason that he's made this chart public today is so that people could look. Yesterday was a day to be bullish on the markets, and it doesn't have, this chart doesn't have the United States. And I know why he didn't put the United States on there, but McCulloch's been catching a lot of shit, and he catches a lot of shit because he puts his stuff out there, and nobody's ever right 100% of the time. And so, any good trader is going to have a good trader. I mean, I'm talking like good trader is going to have a 60-40 win to loss ratio with a P&L, profit to loss ratio that's above 1.5%. That's a good trader. A great trader is going to have a win-loss ratio of 70% wins to 30% losses, with a P&L that's over, over 3, a ratio of 3. There's very, very rarely a trader who's going to have a win to loss ratio for an extended period of time that's 80% win to 20% loss. But there are great traders who can do that over stretches of time. So anyway, basically this right here is a daily chart to help people increase their win to loss and profit to loss ratios. And I'm surprised to see him make it public, but then again, I'm not, because he wants to show his track record here. He wants to show, what he does and how he does it, and it's all scientifically based and so forth. And so today will be a good day to go long, in particular Poland, Belgium, and Switzerland. And so this is, on top of this is the early look. The other products that I have are the real-time alerts, which I don't really like very much. I don't like his entries and his exits, but also I'm a different, my style of trading is different from his. So I'm more of a scalper, where Keith McCulloch is much more of he considers a trade a swing trade, and he's willing to average it in over the period. If he's going to have a trade that's going to be like 2 weeks long to 3 months long. So his style is, it takes time to get used to. But I'm much more of a scalper for the day kind of thing. Although I have gotten into some other trades for the swing trade. And then there's the micro show, the macro show, of course. Now it doesn't start for another 10 minutes, but basically here's the broadcast will start soon. And then let's see, risk ranges, definitely. Risk range signals is something that I go through every day, although I didn't do it today. I haven't gone through and adjusted my risk range signals today. I'll get to that, but these things are definitely really, really helpful. I mean, there's, it's green if he's bullish and it's red if he's bearish. And it gives the signal, so you buy on the low and buy some on the low, sell some on the high, then come back in and just take advantage of the natural frequency of the movement of the market. And then so I have investing ideas, which I also like. I like these. It's just you got to be kind of selective. Market edges. So if you're using the investing ideas, the process is you enter, all of them according to the risk range levels, whether it's bullish. And you can see he's got a bull bear bull, long short strategy here with a lot more shorts than he does longs. This is as of the 22nd. These were updated on the 22nd. And so if you enter and exit these according to the chart, which kind of changes, so you got to stay on top of it. It's too much work for me and not enough return. I don't really like it that much. Let me just put it that way. Okay. And then, here's market edges, which this is something that is really good to stay on top of. I think he puts them out once every, like once or twice a week or something like that. And consensus positioning, interesting. So that's basically hedge eye in a nutshell. And then I have the ETF Pro Plus, and you can see his long short there. and he keeps track. This is when he put these in the bearish, and this is when he put these in the bullish, and how they've performed since, pretty much. So, all right. And it'll change on a weekly basis. Sometimes when things are moving really fast, it'll change on a daily basis. So then there's some other things too that are worth looking at. I'm gonna go ahead and get out of here. Oh, actually, you know what? There it is, right there. Let's look. There's the front page of Hedge Eye today. Yeah, and here it is, right on his splash page. I'm not logged in. See here, I'm not logged in. And so here he put it right. Here's the link. You can look at it for yourself if you want to today. And it works. His system works. So he's putting it out there. God bless. All right. So here we are. The SPY had an amazing day yesterday. This thing opened up. Let's see. It opened at 411.02 and made a low of $410.64. So it dropped by 36 cents, close to the open. Let's look at it we'll look at it on a 1 minute. Let's see. So here it is yesterday. This thing opened up and just took off for the rest of the day. There's a little bit of a lunchtime lull there. You can see between 3:30. Here's lunchtime. This is interesting, and it doesn't always happen this way, but it will often happen this way. Here's 11:30 over here to 13:30. There's lunchtime. This is typical. So we haven't. So in recent history, This 11:30 to 1:30 has been quite a bit more busy. On every other sort of given day on the market, this is this is a lot. You'll see this chart pattern quite often. You'll see bzz, bzz, bzz. That's a classic day on Wall Street right there. And getting involved in a trade in here in this area is a danger zone. This is a danger zone. You don't want to get involved in trades during lunchtime. Usually. Now, things can be different, of course, in different markets. And this, right now, we are in a different market. So today, what's going to happen today? Well, actually, who knows? The probability of what's going to happen today is after an up day like this, like what we got yesterday, it's likely we're going to see continuation, right? And this is totally counter trend to, everyone that got bullish and held their positions and spent the day averaging into a bearish position yesterday. Or I'm sorry, everybody that got bearish on this slide right here, take profits, if it's not too late. If you can hold through this next leg up, then, by all means, hold through it. I think this is a bear market rally. This is a bull counter trend rally in a bear market. Technically speaking, we're not in a bear market yet, but there's a bear market developing. And as we roll into March and April, I think that we'll probably see more and more of this. In fact, actually, you know what? There was PCE. Let's go to Yahoo Finance real quick. We'll take a look at, there's an inflation number, I think, that came out today. Yeah, so stock futures rise as spending tops. Yahoo's like such a not a reliable source. I actually ought to go to Hedgeye to get the full rundown on what all this means. Stock futures edged higher Friday morning as traders eyed the latest developments in Russia's invasion of Ukraine and the world's response. The Ukraine is a convenient. The Russian invasion of Ukraine, as tragic as it is, and there's been human life lost. So by no means am I diminishing the experiences, and I pray for everyone and their, I know it's too late. There have already been lives lost over there, but God willing, the dying, the suffering, and any misery is stopped as immediately as possible. So anyway, let's see. PCA is closely. Contracts on the S&P 500 rose, extending gains after a 1.5% jump Friday. Futures on each of the S&P 500, Dow, and Nasdaq built on gains after new economic data Friday showed U.S. personal spending rose more than expected in January, even accounting for a surge in inflation. Personal consumption expenditures, a closely watched gauge of inflation, soared by 6.1%, or the fastest rate in 40 years. Okay, so I don't know. I think that is a somewhat important report. I heard a little bit about it, on some of the finance stuff that I pay attention to. But it's really hard to tell exactly how important that is or isn't really. In my opinion, it looks good. You would think that adjusted for inflation, PCE rising, is a good thing. But Wall Street might think, well, that's even more of a case for the Fed to tighten, 100 times this year. That's an exaggeration. But there are some people who have said, I think J.P. Morgan came out and said that the Fed's going to raise rates 7 times this year. In all, in normal times, actually would say that's appropriate. Raising rates 7 times by, say, a quarter point each time, only takes the Fed funds rate up to 1.75, right? Times 7. And we're trying to fight inflation here that's run over, to 7%. I suppose if the Fed funds rate goes up to 1.75%, then like the 30-year, the 10-year, and the 30-year will probably go, the long end of the curve ought to go, quite a bit higher, which means, people will be selling their bonds, which means the bond market, it's not going to be orderly. It's not going to be a calm and orderly thing, which is why you're seeing this happen. So that train is in motion, and that's why, I think that this is going to be a rally and what will turn out to be a much larger bear market. Okay, so let's see. That's and so then the usual suspects. I mean, Tesla. This thing has been amazing to trade. Look at this thing yesterday. Opened below this Fibonacci. I put this Fibonacci on. I don't know. I don't remember when I put it on, but I used this level right here. These two levels. If you want to do it on your own charting, January 25th from. Let's see, the 16th of November to January 25th. And actually, you know what? When I put on a Fibonacci level, I actually go backwards. So let's see, January 25th, the top there to, did I have it at the bottom? I don't even remember, 16th of November, 17th of November. I'm going to have to go back and look at my video now. And so if I do it the other way, then I don't get these higher levels. But you can see here, this 1.618 level. Let me zoom in on that. It's hard to see. There's a blue level right here at the 1.618. You can kind of see the color differentiation here. But anyway, it's done a really good job of mapping out Tesla's price action. Yesterday, it was definitely an anomaly. This is an extremely rare set of a price action. It's just so very rare that you see, what is this, it opened up, gapping down. It opened up, I don't remember how low it was yesterday when it opened, but essentially gapped down a significant amount and then closed and ran up, huge. That's a very rare thing. That's actually only something you see in bear markets. Under normal circumstances, you don't see a recovery like this at all. So, okay. And actually, no, here's one. Actually, this is a pretty big candle over here on the 25th of October. Well, all right. So yeah, these are the things that I'll be keeping an eye on in order to trade today. I need to go and take a look over at the. Wow, look at that. Went from the bottom of the risk range there almost all the way to the top. What a huge run. It opened at 2,796 and then closed at 3,027, a $200, more than a $200 per share move. Good golly. 3027.16 minus 2796.75. $230 move. Good golly. On Amazon yesterday. Huge. Well, okay. So, the usual suspects here are what I will be concentrating on for trades today. I think it's going to be. A wild day. I think it's going to be a wild Friday. And if I were to guess, with all the positive implied volatilities and so forth, I think it's going to be another up day. So I will be looking for bullish setups. I'll use a variety of indicators. So, I'll be looking for support you know, somewhere if it goes all the way down to, I'd be surprised to see the SPY go all the way down to 421 today. But if it goes down to 421, then I'll be looking for 421.95 specifically, 421.95. Then I'll be looking for an opportunity to go long right there. And a couple of other things also, relative strength index, dipping down into oversold in conjunction with the SPY or with the VIX. So let's go to the VIX. Yeah, so the VIX blasted through. Actually, let me put let's see what the risk ranges are on the VIX today. Oh, and you know what? Rates actually stayed pretty quiet yesterday. Okay, so the top end of the VIX today is going to be 34.11. And the bottom end is going to be 23.99. Yeah, the volatility is in. That's yeah. So if the VIX tries to come back down here to the 24 level, roughly 23.99, then it'll be time to look for shorts right down in there. And then if it runs up here to the 34.11, then it'll be time to look for longs. So it'll be an interesting day. It's a Friday before, there's a lot going on. I think that there aren't going to be very many people who want to stay long over the weekend for fear of what will happen over the weekend with sort of the geopolitical stuff going on. So if I were to guess, I'm guessing that with all these positive implied volatility sort of readings going on, that we'll see something like a morning, kind of do the morning back and forth thing and then move up. And then when it gets closer to the afternoon, it'll come back down again because people are going to be like, do you want to be long? Would you want to be long this market with what's going on in the world right now with any kind of leverage? I don't, even if things are looking good for a temporary bounce up and so forth on the day. So yeah, I'm guessing, if I were to guess, I'm guessing an up, rather significant up move in the first half of the day with a rather significant down move in the second half of the day. That's my guess. All right, everybody, that is going to be my pre-market strategy session. Good luck out there. Keep your risk tight. Click like, share, subscribe, leave a comment, tap the bell, and I will see you at Monday morning's strategy session. I am out.